Hello. Hi guys. How are you? I hope you are fine wherever you are. I am the Acca tutor, Mr. Jerry Mtunkulu. In this particular video, I'm going to explain a few questions which I found to have been difficult to you guys. And I would also want to explain a few things in relation to this particular topic, that is cost classification and behavior, particularly the aspect of cost behavior. You remember in the notes I pointed out that cost behavior was uh, referring to the variability in the company's input costs in response to the level of activity. So the variability of input costs in response or in relation to the level of activity. When we talk of input costs, these are costs like, for example, materials, labor, etc. Okay, so those are the input costs, but their responsiveness to the level of activity is what we call cost behavior. Now, when talk of level of activity, this could be production volume, okay, production volume, or the amount of sales which are being expected, okay, or which have to be met. Uh, so that's the level of activity we are talking about. All right. So in response to the sales, or the volume of sales, or the volume of production. All right, so those are the levels. Now, without much ado, let me present the first question. But before I do that, I also want you to, as a recap, to realize that um, the variability is dependent upon the nature of the cost. There are costs which are variable, and these are by default the costs which are expected to vary, okay, in relation to the level of activity. That's actually that's the default position of cost behavior. We assume that costs are going to vary in relation to the level of activity, but there are also costs which are not going to change even if the level of activity changes. For example, fixed costs. These are the costs which are not going to change. And an example of a fixed cost is uh, rent. Okay, the rent is always going to be expected to be the same, regardless of the changes in um, production volumes and so forth. Okay, and an example of a variable cost, this could be wages. Okay, wages of say warehouse staff. Those are expected to change. All right, they are expected to change in relation to the production volumes. All right, so that was a revisit of this topic. Now let us go straight to the first question. Okay, I hope my machine here is not going to disappoint. All right, ladies and gentlemen, this is the question. Musonjire Co produces a component ZEX. Okay, so ZEX is the component. The standard cost card for component ZEX is as follows. Production costs, we've got fixed, variable, fixed, right? So on production costs, let me just highlight it. Okay, we're given this information as a fixed production cost of $255.70 and a variable production cost of $483.50. We're also told that there were selling costs. Uh, in these selling costs, okay, we are having fixed selling cost of $124.80 and variable cost of $75.60 and then profit of $60.40. Okay, that's the amount of information you were given, and then the selling price was said to be $1,000 for Zex. All right, and the expected profit after after the production or after the selling of these items X was only $60.40. Okay, now what are you required to do? You are being given these two questions. The first question, that is part A, under an absorption costing system, what would be the value of inventory? Value of inventory. And when we talk of an absorption costing system, this is a system which considers both the variable and the fixed cost. So the total cost, that is the total production cost of an item, is equal to variable cost of production plus fixed cost of production. So in this case, you can say that the total cost for producing Z, the total cost for producing Z is actually the value of Z, the value of the inventory Z. Okay, that is the value of the inventory of Z. So we are going to take these two figures, this one and this one, and we add them up. So if we add these two figures, obviously we are going to get, okay, this is the answer we expect, 739.20. Then on part B, under a marginal costing system, what would be the value of inventory? Now, in marginal costing, we only value variable cost. All right. Now, as a bit of background, when we talk of variable costs or marginal costs, we are simply saying that we do not see the relevance in considering fixed costs for our decision making. Why? Because fixed costs are outside the control of the production manager. Okay, for example, rent. Even if the production manager produces less than a target, the rent is not going to change. The factory rent is going to be paid whether we meet the target or not. So by the end of the day, it is irrelevant. So that's the argument given by the proponents of marginal costing. Are we together, ladies and gentlemen? So let us then consider the variable cost of production. And you can see that the only variable cost of production is this figure, 483.50. So our answer there was this. So ladies and gentlemen, this was the trick for this part. Okay, I said for part A, the answer was 739.20. Why? Because we are considering both fixed and variable. And for part B, it's 483.50. All right. Now, somebody might be wondering and say, so why did the examiner give us a lot of all these figures? Why, when they were realizing that the figures which were relevant with those? Now, the examiner will be testing your understanding of the costing theory. You need to show that even if these are foundational papers, you need to get into that exam hall prepared. Otherwise, you're going to fail. Okay, because these are Acca modules, and you know Acca. It's not a walk in the park. All right, let's go to the other question. Which of the following will be classified as a fixed cost in the operation of a motor vehicle? And we have already tabled this issue. that fixed costs do not change in relation to the level of activity. All right. Now, you need to then stand on that principle for you to be able to answer this question. So let us look at each item. Now, A, oil change every 5,000 kilometers. If we are going to change oil every 5,000 kilometers, so it means that whenever we travel, the oil cost is going to, to increase, okay? Because we're going to change oil every 5,000 kilometers travel. So the travel is actually the level of activity. So the more we travel, the more we require oil. So this again is not a fixed cost. What about B? B, petrol. Now, petrol and oil, the way I've explained is just the same. So this one again, the petrol cost is a variable cost. They change in relation to the level of travel, okay, or level of activity. What about insurance? Now, the insurance here, don't look at this particular variable in relation to the increase in number of vehicles the company has bought. No, just look or just be on the perspective of this of okay, just look at it this way. Let's say the company already has got 2,000 cars, okay, and we have to subscribe to an insurance provider on an annual basis. Once we paid for the insurance, we are not expected to pay another amount again. Okay, so if we are not expected to pay another subscription or contribution to the insurance, we are said to have incurred in a cost that does not change. Okay, so the insurance cost once paid is done, right? So this one is a fixed cost. Sometimes for corporations, sometimes these insurance amounts are paid as a corporate policy, all right, where the insurer simply just say, okay, for your motor vehicles, you need to pay this amount for this year. Okay, even if you increase your vehicles, the insurer is prepared. They simply just say this is a corporate policy. So for corporate policy, you just have to pay this amount and you are done. So whether you have increased the number of your vehicles, they don't care. All right, they simply just say for corporate policy holders, the amount of insurance premium they have to pay is this much. Okay, so the insurance cost is not expected to change. All right, let's look from the perspective of an individual who has got only one motor vehicle. Does the same principle, is the same principle going to apply? Now, if I have got one motor vehicle and I'm required to have, let's say, for example, third-party insurance policy, I just have to pay that amount once, and for that particular year, I am not going to pay anything more. So again, you can see that the insurance premium is not going to, to change in relation to the amount of travel I've made. Even if I goes anywhere, the insurance premium is still going to cover me. So the insurance cost is still going to be fixed. Are we together, ladies and gentlemen? What about tire replacement? Tire replacement is just like petrol, just like oil, because the more I travel, the more I will have to replace my tires. Are we together, ladies and gentlemen? So this one again is not a fixed. So our answer was supposed to be C. Let's move on. Okay, ladies and gentlemen, we have got this particular question, which is of interest, right? And it is based on the high-low method. The high-low method. Okay, this is a method which is being used by cost accountants to estimate the variable cost per unit. It is an extension of the cost behavior theory, and at this level, you need to master this method. Otherwise, you're not going to to come out with anything in that Acca MA1 exam. Okay. Now, the cost of operating the canteen at Denver United Company for the past 3 months are as follows. Okay. We've got the column for month, cost, employees. All right, so there are 3 columns there, which means this one is actually a table. There are 3 columns and 3 rows for information. All right, so this is our table, ladies and gentlemen. Okay, all right, there could be 5 rows, it doesn't matter. Now, the high-low method says that you need to use, okay, for you to estimate the variable cost per unit. Variable cost per unit, ladies and gentlemen, this is per unit, right? Variable cost per unit is equal to costs at highest level of activity minus costs at lowest level of activity divided by highest level of activity minus lowest level of activity. Now, you then have to be able to identify which column speaks of the costs and which column speaks of the activity, because you are given 3 columns and some of you picked this particular column. Just tell me, are we serious with passing this paper? Somebody identified column number 1 as the level of activity, but this was only a period. Okay, this is period information. We are told that this was information for the past 3 months. Okay, so the months is information. The month information was in column, the first column on the left side. So obviously that was not our level of activity column. The level of activity column is this one, and the cost column is that one. So let us then input. Now let's identify the row that has got the highest level of activity. All right, let us first identify the row that has got the highest level of activity. We say that this is the activity column, the employees. So you can see that from this information, this is the column with highest level of activity. The row that has got the highest level of activity. So we have to marry with the cost of that level of activity. So obviously in our formula we say 75,000 first, and we've identified the 75,000, so obviously we have to marry it with its activity, 1,300, minus 75 minus the lowest level of activity cost, or the cost at the lowest level of activity, and the lowest level of activity is this one. That's the lowest level of activity, and we have to marry it with its cost. So obviously the cost should be on top and the level of activity below 1175. So let us use our Excel or our calculator. Here I'm going to use my calculator. Okay, so that's 75,000 minus 68750. That's 6250 divided by the difference between 1300 minus 1175. That's 125. So we're going to have 6250 divided by 125, and we're going to get 50. So 50 was the variable cost per unit. This is, and the unit we are talking about is the employee, variable cost per employee per month. So this was $50. That's your first mark. And then you were then asked fix the cost per month, and you realize when we talk of absorption costing is the costing technique that incorporates both variable and fixed costs. So the formula still applies. The formula for total production costs in an absorption costing system is going to be total cost is equal to variable cost plus fixed costs. Now, let's first calculate the variable cost. Okay, the variable cost. Okay, so we go back to the figures above. All right, we now know that the variable cost per unit is $50. So if we are looking at this particular level, okay, let us use this particular level of 1175 employees. So we are going to say at 1175 employees, variable cost is equal to $50, which is the variable cost per unit multiplied by the number of employees, which are 1175. And we are going to get how much? $50 multiplied by 1175. We're going to get variable cost of 58750. Okay, so if we get the variable cost, the information, remember, we have used the variable cost at the level of activity of, let me change the okay, let me just try to, these are the variable costs which we have used. Therefore, we have also have to use the cost at that particular level, which were 68,750. So we're going to come to the drawing board and say, at this particular level, the total costs were 68,750, which were giving us variable cost of 58,750. But the formula should also include the fixed costs. All right, are we together? At this particular level, ladies and gentlemen, please don't lag, okay? Stop lagging behind. We are talking of at this particular level. At that cost, the activity level was this amount. Okay, the activity level was 1,175. All right, so we have used the like and like. Okay, we have used 68,750 in the formula because that was the total cost at the level of 1,175 employees. So let us make FC subject of the formula. So let us rearrange this formula. FC is equal to 68,750, okay, minus 58,750, and we get how much? Okay, we are going to get 68,750. We are going to get $10,000. So those are our fixed. Okay, guys. I just want to congratulate you for reaching this far in this video. Um, that shows that you are a determined and resilient person, and you are bound to pass this paper on your first attempt. Okay, now this is our last part to the video where we'll be looking at this question and call it goodbye. Okay, excuse me. Now, the question is like this. Production costs have been estimated at two levels of output. And by now you just, I mean, you are now having the high-low method at your fingertips. Everything is now bright and clear. Okay, so we are given two levels of output, ladies and gentlemen, and whenever you see that, the examiner is hinting you to the high-low method. And remember that this is a method used to calculate what? The variable cost per unit. So you're given the two levels of output, that is 50,000 units and 55,000 units. Those are the levels of output. Okay, now you know in your computation for the high-low method that you need to have the numerator with the cost figures, that is the highest level or cost and lowest level cost. Okay, and the level we are referring to is the level of output or level of activity. All right, so which cost figures are we going to pick here, or are we going to compare? All right, now we have already presented a cost card to you in our previous questions. All right, and we say that a product is an issue of is a function of variable and fixed cost. All right, now we're given the information in a bit tricky way. All right, we are presented with prime costs and overheads. Prime cost is the total of direct costs or variable costs. All right, so the total variable costs give us prime costs, or let me just say total direct costs are prime costs, and this include direct labor, direct materials, and variable overheads. Okay, the variable overheads. Now, we are also given the information of other overheads or the ordinary overheads. Ordinary overheads are usually considered indirect overheads, okay, or indirect costs. So this is where we see fixed costs or fixed overheads. Usually they are found, they are normally referred to, or they are found in the bracket of overheads. All right, but if the overhead is variable, then it forms part of the variable cost that is to be grouped within the direct costs, okay, or prime costs in total. Okay, all right. So that's the background, ladies and gentlemen, which might be useful sometime in future. All right, but that's not part of the solution. Okay, so in the exam, do not waste time on things which are not part of the solution. Okay, so we need totals because our formula requires us to have those totals. Remember, the high-low method says that the variable cost per unit should be given by costs at highest level of activity. So cost at highest level of activity, separate costs at lowest level of activity, all divided by uh, highest level of activity minus lowest level of activity. So in this case, which ones are the costs at the uh, highest level of activity? We can only determine those costs after adding up these figures, because remember, all these figures are necessary. The total of this is the total production cost. So we need to determine those production costs. So we need to add up. So that's 430 plus 330. This gives us 760. And 473 plus 339. This gives us 0, 0, 0. Excuse me, that's the code. Okay, so this one is a 2. That's 12, 10, 11. So this one is 812. All right, so we now have our totals. The totals were not clearly given, so you need to lead yourself based on the principle. Okay, you need to understand where the figures come from and how to determine other figures which have not been provided for by the examiners. All right. Remember, by the way, costing or any form of accounting is an issue of making sense out of the numbers. So you need to think there should be some psychometric balance, some psychometric enlightenment for you to be able to sail through these struggles. Okay, so let us now slot in the figures. Which one of the two, the 760 and the 812,000, is should be our cost at the highest level of activity? Remember, we are not being informed by the figures themselves, but we are informed by the level of activity. That's 50,000 versus 55,000. Sometimes you might discover that at 55,000 units, the levels of activity might be showing some interesting levels, okay, cost levels. For example, at the highest level of activity, the figure could be small. Okay, the figure could be small, whereas at the lowest level of activity, the cost figure was high. So do not jump straight and think that the highest cost figure is the first figure to be put at this variable. Okay, you need to be led by the principle. The principle is saying that it should be cost at the highest level of activity, less cost at the lowest level of activity. So the cost at highest level of activity this time is 812,000 minus the cost at the lowest level of activity, all divided by like and like. Since we have taken the cost of at the highest level of activity at 55,000, therefore the 55,000 should be the denominator, isn't it? Similarly here, the 50,000 should be the denominator. So remember, we are calculating the variable cost per unit. So if we punch these figures in our calculators, let me use my phone here. Okay, let me try to use this phone. Okay, that's 812 minus 760. So on top we get 52. Okay, 52,000. What about below? Obvious, 55 minus 50, that's 5,000. So 52 over 5, that's 10,000. That's $10.40. So this is the variable cost per unit. The variable cost per unit. Now, we know, let me try to, what shall I do here? What's this one? Right, okay, fine. Let's try to go to the next page here, the blank page. Okay, now we know that total cost is equal to variable cost plus fixed cost. Okay, so that's the formula for total cost. Okay, total cost is equal to variable cost plus fixed cost. That's the absorption cost formula. Okay, all right. So we then ask ourselves, at the total cost, okay, at the level of say 55,000, the total cost was how much? The total cost was 812,000. So let us work with that level of activity. Okay, 812. So we are saying 812,000 is equal to variable cost plus fixed cost. But we then have to find the variable cost here. The variable cost can be found by, we know that the variable cost per unit was $10.40 according to our computation. And remember this figure if you still remember. Okay, $10.40, that was the variable cost per unit, and the level of activity we are looking at is 55,000 units plus fixed cost. Remember, what we want is to determine the fixed cost so that in the total cost formula we have got all the variables. Okay, so we say again 812,000 is equal to 1040 multiplied by 55,000. 1040 multiplied by 55,000. So we get 572,000 plus fixed cost. So let us make fixed cost subject of the formula. So we are going to say 812,000 minus 572,000. Remember, the 57,000 has to be taken to this side, so it becomes a negative. Okay, plus fixed costs. Sorry, we no longer put the fixed cost again. That will be a repetition. Okay, so we can then solve for the fixed costs. So 812 minus 572. That's 240. Okay, so the fixed costs have been determined to be 240,000. All right. Now we've determined the fixed cost value. If we know the fixed cost, the theory says that these costs do not change in total. Okay, they do not change in total in relation to the change in activity. So the question was saying at the level of 54,000, what will become of the production costs per unit at the level of 54,000. So let us determine the total cost at this particular level. Sorry. Let me try to use a different pen. Okay. At 54,000 units. Okay. TC should be how much? TC is equal to variable cost plus fixed. Okay, so we have now been given a different level now. Okay, we have used two levels, that is the level at 50,000 and the level at 55,000. But the examiner now wants us to determine the cost, the production cost per unit at the level of 54,000. So we shouldn't be dazzled with that trick. We just have to stand on our principle, okay, on our knowledge of the high-low method, all right? But we are not then required to just do the high-low method for now. Why? Because we now know the variable cost per unit. And the variable cost per unit, remember, the graph is constant at whatever level of activity. So the cost per unit does not change. The variable cost per unit does not change with the level of activity. It's just constant. All right. So we just use the same figure, which was how much we had calculated it to be $10.40. That was the variable cost per unit figure. Remember those graphs. Remember those graphs. Okay. Now, banking on that information, we can safely attack this problem. All right. So what do we have to do? We know that total cost is equal to variable cost plus fixed cost. So the variable cost should be $10.40, which was the cost per unit, multiplied by the level of activity. This time is 54,000 plus the fixed cost in total. And we know that fixed costs do not change. The total fixed cost graph says that the cost will remain constant regardless of the change in activity. So we are going to pick the figure which we already have. We already have this figure. We have it. This is the figure we are talking about, the fixed cost in total. So we'll take the figure and we put it here. We add it to our formula. So we're going to say plus $200. Okay, it's not that clear, but anyway, 240,000. So this means that our total costs should then be, let's use our calculators, that's $10.40 multiplied by 54,000, and we get 561,600 plus 240,000. As you can see, the variable costs in total have changed. All right, the variable costs in total have changed. When we calculated using this at this level of activity, the variable costs in total were 572,000. However, at the level of 54,000, the variable costs have become 561,000. So the variable costs per in total, they change with the level of activity. As the level of activity changes, the variable costs in total change. Okay, this is why the graph the graph of variable costs in total changes as well. You remember the graph of variable costs in total changes with the level of activity. Okay, this is the units, which are the levels of activity. All right, but the variable cost per unit, okay, the graph is just constant. All right, why? Because it doesn't change. So this is why we have picked the $10.40. We use the same figure again there. Are we together? Good. So let's proceed. So we are going to say 561,600 plus 240,000. We're going to get 801,600. These are the total costs. The total costs, or the cost in total. However, the question wants us to determine or to estimate the production cost, the total production cost per unit. So we are going to say total production cost per unit is equal to 801,600 divided by the units here were 54,000, isn't it? These were the units. Remember, we are told by the examiner that we want you to determine the cost per unit at the level of 54,000, and I'm sure that was the question, isn't it? Yes. What are the estimated production costs per unit at an output level of 54,000? So all the information is available in the question. So with that in mind, we're going to say 801,600 divided by 54,000 units, and we get the cost per unit of $14.84. And this is the answer. Okay, that's the answer, ladies and gentlemen. Okay, for those who might want to see the question clearly. Okay, I'm sure you're seeing the question clearly there. All right. Okay. Good. We've done everything. Okay. Perfect. All right. So those are the numbers. If you feel like you need further assistance from the tutor, okay, it's me, all right? You can just add me or direct call from wherever you are. Ireland, Indonesia, Pakistan, everywhere. We are here to help you. All right. So, ladies and gentlemen, I want you to feel comfortable. Acca can be passed by anyone. It can be done by anyone. You don't need to be a rocket scientist to pass this course. All right. We were also there. We were also soldiers. We faced the same battles. So, with us, you are going to be, to be rest assured that you're going to pass this Acca within the shortest possible time. All right. So, until next time, ladies and gentlemen, may you please continue to feel excited. I mean, very, very excited. I'm signing up. Thank you.